Hey, what's up, my people? How are you guys doing today? Um, this is what it is. If you are a new member of this family, welcome. And if you are a recurring member, welcome as well. We'll continue our discussion on national income accounting, the income approach. I'm hoping that this is going to be the last dance on this particular aspect of national income accounting. So, in this particular video, we want to talk about another solution, how to address a different kind of question on the income, approach. So here we have given data below. We have to find the national income and market price, GDP and market price. I said it before that national income on its own is actually NNP as factor cost, right? But then if you are now asked like calculate national income and market price, and that means national income at the point of selling goods and services. So it is going. The question will make you know if you have to do national income as market price. But if it just says calculate national income, and what you are going to do there, what you should do, or what I think you should do, is calculating the NNP as factor cost. And whatever it gets is going to be equivalent to your national income. So we have indirect taxes, tax on goods and services, wages and salaries, statistical omission, which is also known as the statistical error or the statistical discrepancy, rent, interest, profit, net property income. This is another name for net income from abroad, because they have net property income. In some questions, you are going to be having income from abroad or property income from abroad, property income to foreigners. So, what to get the net, you are going to do property income from abroad minus property income to foreigners, right? And for interest, sometimes you might have interest paid, interest received. So, in that case, you'll be having interest received minus interest. It's always a credit alert minus debit alert. So, it's going to be interest received minus interest paid. So the net interest is what you are going to add in your income, right? The net interest in case you have. So same for rent. If you have rent paid, rent received. So what you're supposed to do is rent received minus rent paid. So the net of it is what you're adding up. As remember that whatever we're getting here is net domestic product as factor cost. So I'm just trying to like show you different ways that questions might be asked. So, but if you don't have interest paid and interest received, and you just see interest, pick it, and you can't have just interest and then you now have interest paid interest. It doesn't make sense. But if you have net interest there, so just pick net interest. So if you have net interest and you have interest paid, pick net interest because that's the full thing, right? So you have royalty, social security contribution by employers, bonuses, capital consumption allowance, which is the same thing for depreciation. So capital consumption allowance or capital consumption alone or depreciation or wear and tear. So sometimes you could have allowance for wear and tear allowance or just wear and tear. It's still talking about depreciation. Okay. Then you have general government subsidy. You have income of partnerships, which is an example of proprietor's income that we discussed in the first class. And then you have net exports. Actually, net exports is not a part of this question. I intentionally added net exports because I wanted to talk about this. So we have value in brackets for accounting students. You know that it's a negative value. So I intentionally put net exports because I wanted to explain this. So if you have a set of values and then one of them is in brackets, it simply tells you that that's a negative value. So here, this is actually minus 400, right? Which is saying that the import is 400 more than the export. Net export is export minus import. So if you're having minus 400, that means import is 400 more than the export. And then for mixed income, in the first class, I didn't remember to talk about mixed income. It was in my material, I've now skipped it. So mixed income is just income that cannot be attributed to a particular source. You cannot call it rent, you cannot call it profit. Like it's the kind of income that is generated when an individual is supplying a couple of factors of production. So like you cannot categorize this income of is or as in like one place. So you just call it mixed income, right? So income that cannot be attributed to other income components in the income approach and is and might be as a result of an individual, supplying different factors of production. So that's about. So I intentionally added mixed income and net export because of what I wanted to explain. Okay, so let's go into the question. Let's dive quickly into the question. And for the first time, I'm going to have an assignment when we are done with this. So NI as market price. So remember that market price on its own, market price is actually factor costs, factor costs plus indirect tax, indirect tax, then minus subsidy. So factor cost is also known as basic price. So if you see something as basic price, it's also the same thing as that thing as factor cost. So like I said, these things may be like a lot. So but then you have to get used to them. For me to like present a class like this, it was not a this job. So like you have to just get used to them. So factor costs or basic price, maybe I should even write it. So it could be called factor cost slash basic price. So if you have anything that is at market price, just add indirect taxes, subtract subsidy to the factor cost equivalent of it, and then you're going to get a market price. And from here, you can also get your factor cost. So market price, then minus indirect taxes, then plus subsidy, will give you your factor, cost. So let's proceed with the solution. First, you get NI at market price. Um, NI is same as NNP as factor cost. So we are NNP at factor cost. Since this is at market price, so NNP as factor cost on its own is NDP that we are going to get after adding up in here. NDP as factor cost, then plus NFIA. That's factor income from abroad. Now to convert NNP as factor cost to market price, NNP at market price is that going to be NNP at factor costs plus um, net indirect taxes, which is same as indirect tax minus subsidy. So um, net indirect taxes, net indirect taxes. All right, and we know as NI as market price is already equal to this. So the issue here is now for us to go and find our NNP, NDP rather, NDP first, NDP at factor costs. So NDP as factor cost, what are the incomes, wages and salaries? Like we are having wages and salaries, we are having social security contribution by employers, on and on like that. So what we have to go and look for is these are family members. Like we have compensation of employees, which is the general name, which is the family name for all of these things. All right, wages, this goes to labor, this goes to labor, bonuses goes to labor. Okay, nothing else. So we don't have compensation of employees, so which means we are picking the family members. So you pick wages and salaries, you pick this, we pick wages and salaries, we pick this is also an income, rent is an income, interest is an income, profit is an income, net property income, this is the NFIA, net income from abroad or net property income, that's NFI. So we are not adding that here because we want to get NDP as part of cost. Royalty is an income. Social security contribution, e.g., pension contribution is an income. Bonuses is an income to workers. Capital consumption allowance, no. Government subsidy, no. Income for partnerships is an income. And that's all. So again, wages and salaries, rent. Now, I don't know if I've explained this in this video that if you have sometimes you may have rent received, rent paid. So if you have rent received and rent paid, so we are going to this credit alert first minus debit alert. Rent received will give you a credit alert. Rent received minus rent paid. So the net rent is what you are going to add. So just in case, but if you don't have anything like rent received and rent paid, and you just have rent, so add rent. All right. And the same for interest. So sometimes you may have interest paid, interest received. So interest received minus interest paid. So you have the net interest. You have net interest. So you add net interest. Okay, but if you don't have net interest, you just have interest. So like just add interest. All right. So I think that's what I want to say there. All right. So NDP as factor cost where if this was an exam, all these items that you've identified that you want to add, you write them out. So we are going to write wages and salaries plus rent plus interest plus profit, on and on. All of those items, you write them out in the formula because there will be marks allotted to those things. So you don't just start picking their numbers. No. What numbers did you pick? Like what but the names of the items or the numbers that you picked. So you must let the word to know. Don't assume that examiners are going to know that. But I'm skipping that for the sake of space. I've told you. So wages and salaries, you have 900. So you have 900. No. So you have 900. Remember that it's thousands of naira. 900 plus rent. 1, 2, 3, 4. 1, 2, 3, 4. Rent is 350 plus 350 plus 350 plus interest is 500 plus 500. 500. Profit is 450 plus 450. 450. Royalty is 350 plus 350. Then plus social security contribution. This is also part of compensation of employees. Plus 400. Employee bonuses 110. 110. Then plus capital constraint no, subsidy no. Income of partnerships 440 plus 440. So our NDP as factor cost equals 900 plus 350, that's 1250. 1250 plus 500, 1750. 1750 plus this, that's 2200. 2200, 2550, 2950. So this is 950, this is 550. 2950 plus 550, 3005. 2950 plus that's 3005. So NDP as factor cost is 3005. Then going on, we now have to go and calculate our NNP as factor cost. So NNP as factor cost, NNP as factor cost equals, all just do is we add NFIA to NDP as factor cost. But then remember that I mentioned that whenever you are converting NDP to NNP, if you have statistical error, like you also need to add it. So because we have it here, we have statistical omission here, so we are adding this statistical omission. So we'll be having NNP as factor cost equals to NDP as factor cost that we got here, 3005 plus net property income, which is this. Property income is 115 plus 115, then plus 30. All right, so this is going to give us 35 plus 145. That's 3645. 3645. All right. So now that we've gotten our NNP as factor cost, that's also going to be our national income as factor cost. So the next thing that we are supposed to do here, this 145, is N9 as market price is equal to your NNP as factor cost, then plus your net indirect tax. So you add indirect taxes and you remove subsidy. So what we are going to be having in that case would be N9 as market price is 3645 plus the indirect tax. We're giving us that as 360 minus this is general subsidy is 220. All right, so we are going to be having is this 140? 140. Okay, so NI as market price. So what we have here is what we call the net indirect taxes. That is indirect taxes minus subsidy. So yeah, this should be 140. So 140 plus this is going to be 3785. 3785. Okay, and yeah, sure, that's correct. 3785 then into this unit. So with that, we've been able to get our national income at market price. So that is for A. Some of these that we've done is for A. Then for B, as it gets GDP at market price. GDP as market price. So we kind of have to like demystify this to get GDP at market price, but there should be an easier method. So let me rub off the top so that we can solve it. So proceed to get our GDP at market price. So I can just put that one here. There's a formula that connects national income and GDP, and the formula is national income as market price is going to be equal, since we already got our national income first, it's going to be equal to, remember N9 is net national product. And net national product is also um, gross national product minus depreciation. Okay, but the formula that I just want us to use in this case, um, NI is GDP plus net factor income from abroad. Like this one that you have here is the GNP at market price, alright, then minus depreciation. So this minus depreciation is actually equal to NNP slash NI at market price. So I hope you understand this. It's just a play with formula. Alright, so we know national income to be NNP as factor NNP, right? Plus if you have all of those errors or whatever. Now since the another we can get to NNP is your GNP minus depreciation. Then we can see further break this GNP down to be GDP, right? So GDP plus net income from yeah. So which is what we've written here. So GDP plus net income from abroad, which turn domestic to national, what we learned in earlier classes. Then this minus depreciation will change your gross, to net. And then we already have national income at market price as this. So what we just have to do is we are looking for GDPMP, we make GDPMP the summate of this formula. So GDPMP, GDP at market price is going to be equal. So this guy is going to be left here. NI minus NFI plus depreciation. We have NI at market price minus NFIA then plus depreciation. All right. Again, just rearranging. So GDP is left here. NI minus this plus that. So this is going to be equal to 3785 3785 minus the net property income from abroad is 115 minus 115 then plus depreciation, we've used it before, capital consumption allowance 320 320. So solving all of this, um this plus 115, let me quickly do that. 3785 plus 115 0 1, then this is 0, and this is 9, this is 3, 3900. Okay, so 3900 plus 320. Oh, sorry, I was meant to do subtraction. Minus 5 minus 5 is 0, 8 minus 1 is 7, 7 minus 1 is 6. So we have 3670. So 3670, is it 3670? 5 minus 5 is 0. 8 minus 1 is 7. 7 minus 1 is 6. Yeah, 3670. So 3670 plus 320, that's 3990. 3990. Okay. So all of this is going to give us 3990. So that's the answer for our GDP at market price. Alright, so then the units. But I think properly in mathematics, this is actually supposed to be written as N3990, 3,990, then 000. That's going to be the GDP at market price. Alright, so with that, we've solved the questions that we're supposed to solve here. So what we just need to do is our assignment so that we can work on it and have something to practice with. So here is the assignment. Just calculate the national income from the data below using the expenditure and the income approach. So the items, of course, you'll be having items from expenditure and income approach. This is going to be testing a lot of things that you've learned up to this moment. So you have government final consumption, 1050, 1050. Subsidy is 200. Interest is 300. Right. Gross domestic capital formation, which is an example of investments, is an item under investments, 1000. Rental income 150, mixed income 650, 650. Social security contribution by employers 100. Compensation of employees 4,000. Sales tax 850. Retained earnings 150. Net export is 0. Property income from abroad is 450. Property income to abroad is 400. Then personal income taxes is 100. Private final consumption expenditure is 4,005. Pay and tear is 600. Child support by government is 150. Corporate profit is 750. Corporate profit taxes is 300. So with this data, um, answer the question. So I wish you guys the very best. For emojis economic economics students, remember to submit it and I'm going to get corrections if necessary. So yeah, I think the two of them should give you the same answer. Both approach should give you the same answer. But if you solve and you think that what I solve is correct and I'm not getting the same answer, it's fine. Submit it. All right. So if there's need for correction, I'll let you know. Thank you. In the next class, we'll be looking at personal, how to calculate personal income and all of that. So bye.